Rohit Srivastava, the founder and market strategist at IndiaCharts.com, joins us this morning. Rohit, good morning. First up, your view on the general outlook this Monday morning. It seems like a mixed bag, barring auto sector, of course, which is seeing some healthy gains this morning.
Yeah, thank you for having me at the start of the week. And what we're really looking at is a market that is trying to come back from some of the worst negative sentiment that we have seen in quite a while.
Right.
But the good news here is that broadly, both the Nifty and Bank Nifty have held certain levels, repeatedly. For example, the Nifty itself has held 24,500 twice in the month of August. So that becomes a very important support from where it is going to try and attempt to build an upside move. Very similarly for Bank Nifty, I would put that level at 53,500. I think these are important watch points on the downside from where the market will attempt to move higher as we continue from here, because a lot of the negatives, especially those related to tariffs, etc., seem to be discounted. And what we are really looking at is how measures from the government will help this move forward. And apart from that, what happens on the interest rate cycle, not just in the US, but in India as well. So I think a combination of these things do create room for a positive outcome, as we move from September into October. And that's what we should be, looking out for. It may look a little slow right now. It's possible that the momentum picks up slowly, but if these levels hold, I think the risk reward is favorable to the bullish outcome.
All right. You did mention the interest rates, and of course, that is closely linked with inflation. And in fact, India's own inflation print for the month of August is expected to be released on September 12th. Meanwhile, we also are expecting more data coming in from the US, both on inflation as well as consumer sentiment. So that is something which would be awaited. But on tariffs, and since you mentioned that, Rohit, do you see some mixed signals from Donald Trump and his administration, especially at a time when over the weekend we saw a positive tweet from Donald Trump and a reciprocal sort of reply from Prime Minister Modi? And then again, we are seeing mixed signals on secondary tariffs with respect to, Russian imported oil in India, and phase 2 and phase 3 being discussed on those sanctions as well. So do you see some sort of mixed signals, or is it just Donald Trump being Donald Trump?
Yeah, that's a pretty tough call to take, because there's often a difference between what he says and what he does, and we don't want to read too much into it. But we'll go by what has happened so far. If at all something changes, I hope it will be more specific, which means that if he wants to target oil and not India as a whole, then probably the entire tariff structure should change in that direction. But once we've reached this point where, tariffs are 50% and, orders have come to a standstill for a lot of exporters in the months ahead, things can only get better. I don't think they can get worse from here. That is how we'll have to think about it. And so, yeah, not to read too much into what they're saying right now. Wait for an actual outcome. And like I said, it should probably be a better outcome than what it is.
And I want to specifically also talk about data which is coming from FIIs as well as DIIs. And now we've seen in the first week of September, almost 12,500 crore rupees worth of equities have been dished by FIIs. On Friday alone, we saw as much as 1,300 crore rupees worth of FIIs selling. But DIIs more than compensating 1,800 odd crore rupees bought on Friday alone. So do you think this is still going to be largely a domestic sentiment-driven rally rather than one where we have a lot of dependence on foreign players?
Yeah, that's an important play. Since 2015 that we put LTCG on foreign investors, I've been of the opinion that that's significantly slowed down global flows into India. We have seen them come in waves, but we haven't seen it happen like it used to be prior to LTCG. Because back then it used to be mostly every month is positive. You used to have a few negative months only if you had a significant bear market.
Right.
Now you get many positive and negative months every year, and then we start questioning how FIs are really looking at India. So tax plays a very, very important role when it comes to global asset allocation, not just that you're a growth, nation. So I think that will remain an issue. It's not, the only thing we can look for is that when markets do improve, you'll probably see reduced selling from FIIs.
Right.
But at this point of time, you might still see continuation of these negative numbers. But what we really study from a market sentiment standpoint, we look at the long short positioning that the foreign investors are doing, and domestic institutions now also, since they're significant, having in the index futures positioning. And
Right.
that is now at the second highest on record. So this is the second highest short position that FIs have built up compared to what they had done in February.
All right.
And days after they did that in February, in early March, we ended up getting a meaningful bottom. So we are at a very significant, similar reading that we are getting right now from their positioning, which is there's a lot of short. Now, what does that really mean is that, if you get even the slightest positive news flow coming into the market, then you start seeing some amount of short covering, and that also helps push up the market. So
Right.
it simply reflects the negative sentiment and hedging that they have done, considering the risk. But when your hedges are at a maximum, then only it can reduce from there. That's
You're
the
right.
main point.
So, do you think the next step in tax reforms now has to be this LTCG and STCG, because the government has gone ahead, simplified and given a lot of incentive to the middle class by way of the direct income tax, and then of course we've seen the GST reforms as well. So, do you think next on the government's list for must do is this LTCG, especially when it comes to equity trading?
So I don't think they'll change it on the domestic front.
Okay.
We had a zero tax regime for long-term investing for very, very long. And once they have changed that, I don't think they're going to go back on that for domestic investors. The real incentive is whether you want to provide a differential rate to foreign investors to ease the pressure on the currency front. Because you see, the biggest hit that India is taking right now because of the US tariffs is essentially the currency, because our current account deficit moves by more than half a percentage points, and then immediately means that you're going to need more dollars to buy the imports that you're really doing. And you can see the USD are already almost back to the previous all-time high. So it's possible that it continues to slip if there is no other policy change from the US side. Now, the
Right.
only way that we've been managing that over a long period of time has been either the indirect flows that we get from a lot of Indians that work abroad. Okay, that is what we call as invisibles, and the second has been FPI flows. Right, they have been the biggest balancer historically for the money that we have on our account.
All
So
right.
that is the one place, if you really want to attract foreign money and get it back into what we call as the highest growing nation in terms of GDP growth in the world. I think it will be if we provide some kind of tax concession to foreign portfolio flows.
All right, so some tax concession to foreign portfolio players. But what I'm looking at the charts this morning, Rohit, and let's come back to action from the last read this morning, is the FMCG space. And that seems to be a little negative this morning, given the fact that you have Nestle, which is down about 0.7%, Tata Consumers, HUL both down about 0.2% or so. ITC, of course, we understand there is unlikely to be too much negative in terms of its sales of tobacco products, and that is keeping the stock ticking. But beyond that, you're seeing the rest of the FMCG pack slide under some pressure this morning. Is there something that's going on, or is this just an anticipation of the inflation data and maybe some profit booking on the rise that we saw last week?
So you see, if you've discussed the topic of the sector over a period of time, you'll find that FMCG has been an extremely overvalued segment. The only time that it gets some amount of demand is as a defensive bet. So when markets are weak, people don't know where to put their money. You'll find that the FMCG sector actually outperforms, and that's sort of what it has done on a 6-8 month basis compared to the Nifty. But moment you see markets improve, you see it pick up. Then you will find that there is some amount of selling that again comes back to the segment, because people are reallocating capital away from defensive to areas where growth can show up. And so that is why, if I take a slightly longer term view, like 1 to 2 years, I would find other areas to invest rather than FMCG. FMCG just plays a good role during difficult periods in the market.
All right. And finally, I want to talk about gold as well, Rohit, before I let you go. And gold, of course, the expectation was that come Diwali, the prices will be in the range of about 1,08,000 rupees per 10 grams or so. But guess what? Just last week, we touched another lifetime high of 1,07,740. Now, where does one expect gold to go from here, given the fact that, of course, this is festive season, and also the fact that central banks, not just RBI, but central banks around the world, are stockpiling more gold than ever before? more. So where do you think the gold rally to go? And given the prices that we are seeing right now, should there be a change in the asset allocation formula, and should people hold on to more gold?
Yeah, so there are a couple of things to keep in mind on gold. One is that are you holding it for a long-term, investment, or are you simply trading on it? So from a trade perspective, we are in very late stages of the current move that probably started in 2022, 23. And what I mean by that is that it's getting very overbought. Even when we look at a monthly chart, the RSI readings hitting 89, 90 are very, very high. So that creates room for a correction in gold prices down the line. It may not be tomorrow morning, but somewhere 1 or 2 or 3 weeks down the line, you might see that we finally did get a peak from where you get a long-term consolidation. This is also a seasonal effect because usually we do see gold prices peaking sometime around here, September, October, and they are often dull into the year end like December. And then there's usually a pickup between December and March. This is the seasonal cycle for gold. So you have to be prepared for some kind of a pushback or correction in the weeks ahead. But if we take a long-term view, if we try to take a 3-year, 4-year, 5-year kind of view on gold, I think gold is in a long-term bull market, and that is definitely not over. But if you're looking at fresh accumulation, then you might get better prices at the bottom end. The last part is investors always have to think between equity and gold. So there are phases when gold will appear to outperform equities, and then there's a phase where equities will outperform gold. Yeah. Now we've seen significant outperformance of gold relative to equities, so it might be time to really increase weightage on equities relative to gold, and that's another thing to seriously consider.
All right, increase weightage on equity with respect to gold. Well, thank you so much, Rohit. Always a pleasure having you here with us on News 9. Always a pleasure. Thanks.